What's going on, guys? Welcome back to the channel. We got some very positive news potentially for the markets that will make the markets go up on Monday, in my personal opinion. Now, my stance on the Fed meeting Wednesday is that the Fed is not going to be as aggressive as the markets are currently pricing in, with the next 5 Fed meetings being a 0.25% rate hike. I think because of geopolitical tensions as well as inflation not being a demand problem, we're not really going to see the Fed take a super hawkish stance like the markets are currently pricing in. Thus, meaning the markets will have to reevaluate their thought process and will have to price in less potential rate hikes, meaning a lot of stocks, specifically stocks like Sofi, will go up here this next week. But now we just got some bullish news to go over, and that's what we're going to talk about here in this video, as well as I want to go over these 2 articles, and I'm just going to read you guys the headlines here. It says 3 high growth stocks that could soar. Obviously, Sofi is one of them. And then this other one, aggressive investors ought to be buying Sofi stock under $10 per share. Now, if you know Motley Fool, they are a very tough critic. They do have a good track record, and they do not fare lightly to stocks they don't like. They will tell you that they do not like this stock and why they do not like this stock. So the fact that they like Sofi this much, like we're going to talk about, is pretty incredible. And we are also going to go over the fact that Sofi did just get a $12 price target. And we're going to talk about B of A securities and how fraudulent this investing firm is with their actual downgrades and upgrades. On top of that, we're going to go over the option flow sentiment and the short interest as far as the Ortex data. So if you guys find value out of this video, hit that like button and make sure to subscribe to the channel so you guys can stay up to date with all of this key information. As well as that, if you guys want to support the channel, I've had a couple people ask, how do I support the channel? Well, links to get free stocks down below in the description with Webull, Moomoo, and Public. Every time you guys do that, I also get a free share, so that does help support the channel. Thank you guys for those of you that went ahead and did that, as well as subscribed and liked the video. Let's get into it. So Sofi on Friday was down 9.14% in regular trading. This looks like a landslide. As soon as we opened, there was a lot of shorting pressure. And why do I say shorting pressure and people not just selling? Well, there could be people selling too, but I think a majority of the selling pressure is coming from shorts. It's not necessarily from people that are selling the stock, because at a certain point you tend to run out of sellers in a stock, and then shorting tends to be the only thing that is left to push these stocks down. Think about Sofi, PayPal, Square, or even just PayPal. Great business, increased their revenue 35% in the last 2 years. Now they're under their pre-pandemic levels. There's no sellers left in that stock. There's no sellers left in Square. There's no sellers left in Sofi. All it is a lack of buyers and a lot of shorts. But eventually, as we know with shorts, they have to buy back those positions. Even if you don't get a short squeeze, inevitably you will see the price go back to that fundamental level. And if the Fed gives us that dovish tone, which I think they will on Wednesday, you're going to see a lot of people getting out of these short positions. It won't necessarily cause a short squeeze, in my personal opinion. You're not going to see the stock go up 100% in a day. If it does, great, but I would think it would level out and go back up above $10 per share. Now, the bullish news that I really want to share with you guys is this. Ukraine Zelensky shows some optimism about talks with Russian officials. Ukraine President Volodymyr Zelensky on Saturday expressed some optimism about recent discussions between Ukraine and Russian representatives. Quote, they have started talking about something, not just throwing ultimatums, Zelensky said at a press conference, according to NBC News. I believe that this is fundamentally different approach, and it should be so. He called for a peace process, the end of the war process. Zelensky said it would need to begin with a ceasefire. He added that some leaders have been filled in on the communications between Russian and Ukrainian parties. Quote, those who are in contact with the Russian leader have this and they need to speak up, he said. I know that the signals from them are not bad in terms of the proposals that have came from us. So like we seen, the last 3.5% positive day on the NASDAQ was due to this 12-hour ceasefire between Ukraine and Russia. So if you start to see, that getting better, the tensions dying down a little bit, no chemical weapons or a tactical nuke or anything crazy, I do think it will be a bullish thing for the markets. And Russia, even though they won't want to do this, their economy has went to zero and they are not seeing any investment dollars. Billionaires, oligarchs are losing all of their wealth. The country is in shambles. You can't even, go get KFC or Pizza Hut or Taco Bell or McDonald's or these things that Russian people have grown to really like since the Soviet Union collapsed in 1991 that they all of a sudden had access to. Now it all just got stripped away. And people do not like that, and that is really going to put pressure on Putin, and that's where I think they will try to come to some kind of agreement. Highly unliked in Russia to be in this war, at least from the soldiers' perspectives, the ones that we have heard. So this could be a very bullish thing, and I would imagine it would be. Now, as far as the actual short interest and the option flow sentiment, we're going to get into this, and then we are going to read these articles and go over the price target. So for the cost to borrow max, which this is one of my favorite things to look at, cost to borrow max is at 8.58%. So this is the cost to borrow, meaning if a short seller wanted to short the stock, this is the interest rate that they would have to pay, 8.58%. Now, the utilization, when it's at 100%, means that no holders, hedge funds, or institutions of SoFi stock want to lend out their stock. Well, they would get 8.5%. So if they don't want to lend out their stock for 8.5%, which is a very decent return when you're talking about millions or billions of dollars, that would imply that they would think the stock would go higher than 8.5%. Maybe I'm crazy there, but I think that makes a whole lot of sense, right? If you expected to get 20% in the next couple of months on your SoFi stock, why would you lend it out for 8.58%? Think about it like that. It does not make too much sense. But like I was saying about essentially the sellers are really gone and the shorts have really taken over. Look at this chart. This yellow line right here is the short interest. The short interest from back here was only 1.72% back in August of 2021, and you can see really ever since the price of the stock started to go down from $15 per share, the short interest has really started to kick up, now at 18.25%, and that was actually confirmed on February 28th to be 18.62%. With 119.15 million shares that are sold short. So a direct correlation, stock price going down, short interest going up, that does not give you any indication that actual holders of SoFi stock are selling out. Quite the opposite. They are holding. There's a lot of short pressure on the stock. And right now, we are estimated to have 132.45 million shares that are sold short. That cost borrow max, like I said, at 8.58%. Utilization at 100%. It has been like that for the last couple of weeks. And the days to cover is sitting at 3.04. So that means if all shorts wanted to get out of their short positions, it would take 3.04 days to do so. So if you do see a bullish reaction after the Fed meeting on Wednesday, if the Fed says, hey, we're going to do this rate hike, but we're just going to calm down on any future expectations for rate hikes. We're not really in the camp of Paul Volckering you. We're not going to raise rates 5 times in the next meeting, just hawk down on inflation that we can't control because it's due to geopolitical tensions, and we're not going to put the economy into a deep recession, then hey, SoFi is likely to rally, especially SoFi because their business is so focused on interest rates. But another big reason shorts have been shorting the stock is because Biden extended the student loan moratorium where nobody has to pay back their federal student loans. So why would you refinance your student loans if you don't have to pay them? This is the perfect time to refinance on your student loans because eventually you will have to, and interest rates will be a lot higher in the future when you want to refinance on your student loans, but people don't look at it like that. So SoFi, that is their biggest segment of their business right now, and that does not bode well for revenue at SoFi, even though SoFi's revenue was up 55% and the business is growing like a wildfire in California. investors find that is a good reason to short the stock, which will be to their downfall. Now, as far as this, I want to point this out as well. The max pain for next week for SoFi stock is $12. Now, what is the max pain, you might be asking? It says the max pain or the max pain price is the strike price with the most open options contracts, and it is the price at which the stock would cause financial losses for the largest number of option holders at expiration. Now, the market makers, they make the markets. They provide bids or ask willing to sell stock or buy stock and try to keep the spread narrow. Think back to 1987 when the markets were crashing during Black Tuesday, right? Markets fell 20% in a single day, 22%. The reason that was really is because there was not market makers in the same way. So the bid and the ask got ridiculous. Imagine for SoFi stock, there could be somebody willing to buy the stock at $10 and somebody willing to sell the stock at $15. You're going to get a wild spread, and there could be a lot of manipulation there and a lack of price discovery. So market makers, they do the same thing with options to keep those bids and asks pretty close together, especially on a very traded stock like SoFi. They will take about 90% of the back end of calls and puts. So when they do that, they want the contracts to expire worthless. And the way they collect the most money is getting the stock to that max pain price. And the max pain is $12 by this Friday. That's a pretty big jump comparatively to the max pain that we did see on this Friday, which was $10. So you guys just got a crash course on max pain and why I do like to look at that. It's never definitive, but it usually is the price where institutions and market makers, hedge funds like to kind of keep the stock pinned. And as far as the option flow segment, we'll go ahead and take a look at this. The positive order value for Friday was 73%, 12 orders totaling $2.28 million. A lot of $10 calls, a lot of $15 puts that we are seeing coming in from the option flow sediment. These are your big guys. These are your whales. These are not these are not retail investors, but your big guys. So we've seen over and over again, the option flow sediment has been very bullish for SoFi stock. But now let's get into these articles. So 3 high growth stocks that could soar. Number 1 is SoFi. Following its 2020 initial public offering, financial technology specialist SoFi Technologies has been one of many volatile special purpose acquisition companies to hit the markets in the last couple of years. SoFi is trading within a share price range of $9 and $24, and its current mark of $10 is almost exactly where it was at its IPO, suggesting it might be worth a second look. Through its mission to help people reach financial independence to realize their ambitions, SoFi operates across 3 business segments, lending its Galileo technology platform and its financial services. Initially famous for its new age approach to helping people refinance student loans, it has quickly blossomed into a full-service fintech. Thanks to its operational expansion, SoFi has seen a massive uptake in its offerings across the board, posting 87% member growth and 54% sales growth year over year for the fourth quarter. The company has almost quadrupled its customer count in just the last 2 years and now has nearly 3.5 million members. In addition to its member growth, what makes SoFi attractive to investors is its tremendous product optionality. First, its young financial services unit, think checking, savings, investing, credit cards, etc., quadrupled its revenue year over year during the fourth quarter, strengthening SoFi's overall ecosystem. Second, its $1.1 billion all-stock acquisition of Technisys showed its ambitions to be the go-to provider for any behind-the-scenes infrastructure needed by fintech companies. Paired with Galileo, which holds a dominant share of the neobank processing market in North America, SoFi is ready to power transactions in an increasingly digital world. Thanks to this opportunity and management's guidance for $180 million in earnings before interest, taxes, depreciation, and amortization in 2022, SoFi is poised to grow well beyond its current market capitalization of $8 billion. Obviously, a very strong buy. Now, what does this article say? Aggressive investors ought to be buying SoFi stock under $10 per share. There are a lot of worse investments you can make than buying SoFi stock at current prices. It says, I continue to believe that SoFi has the potential to become a major player in financial services. As I stated in my last piece about SoFi stock in mid-February, it's an excellent long-term buy for aggressive investors. Its fourth quarter numbers and 2022 guidance haven't dampened my enthusiasm for the company. And if we take a look at this, 2022 has not been so kind to SoFi stockholders. If you've been a fan of SoFi's business and stock, as I have, 2022 has been rough. SoFi stock is down more than 40% year to date. And let's just go ahead and read the bottom line here. So it says, the bottom line on SoFi stock. SoFi expects adjusted earnings before interest, taxes, depreciation, and amortization, EBITDA margins to be 30% in 2022, excluding Technisys business, which was approximately $70 million in 2021. As a result, SoFi should generate an adjusted EBITDA of $453 million in 2022. It might not be a GAAP profit, but it's getting closer every day. Is buying SoFi stock under $10 a slam dunk? Absolutely not. Investors have altered how money losers get valued, and that's probably not going to change until the Russia-Ukraine war is over and inflation has slowed. When that is, I couldn't tell you. However, if you want to make an aggressive bet on an exciting fintech, I don't think you're throwing away your money buying shares under $10 per share. If you're risk adverse, I recommend you find an ETF that holds a decent sized position in the firm. And this guy does not have either directly or indirectly any positions in the securities mentioned in this article. So what he's saying right here, and I know a lot of you guys probably, jumped at this. Is buying SoFi stock under $10 a slam dunk? Absolutely not. Well, he's saying this because he doesn't really want to come out and say that it's a slam dunk, because who is ever that right or definitive in the markets? But the truth is, buying SoFi stock under $10 per share is a slam dunk, but it only depends how long you're willing to hold the stock. If you're willing to hold the stock for 3 to 5 years, it's no doubt, in my opinion, a 10x from here. If SoFi stock in 3 to 5 years is not $70 billion, just unsubscribe to the channel. We failed here on this channel. I think at these prices, at a $7 billion market cap, you will at least see a 10x from these prices by 2025, by 2027. You're going to see a nice return, in my personal opinion. So that's basically all as far as the technical analysis is concerned. Like I've said many times, you need to watch that $10 price. If we do get a dovish tone from the Fed, I think we will pop above that. But honestly, the lower we go at this point, the better the situation looks. And we are also seeing a lot of resistance around the 48-day exponential moving average and the 13-day exponential moving average. And that is sitting at $10.17 for the 13-day. For the 48-day, that is up here at $12.12 per share. If the max pain is correct, we should be over $10 per share, in between $11 and $12 per share by this Friday. Who knows on that aspect? The volume is looking good. The RSI is on the oversold side, and every time we have been on the oversold side in history, we have tended to rally, and we don't tend to go under the oversold side. And let's go ahead and pull up the MACD, and the MACD is pretty much neutral. The yellow line, the CCC line, is under the blue signal line, but it's not under it in a substantial way, so I'm not going to draw any definitives here. I think the chart goes to show itself that the stock has fallen. It's pretty bearish right now. Sellers are gone. I think anybody that was going to sell the stock has probably sold the stock in this range up here, $15 to $13 per share. At this point, it's just shorts that have taken over the show over at SoFi. And to be quite honest, my portfolio looks like SoFi stock. My average price is around $14, $15 in my main portfolio, and I'm looking to average down big time before the Fed meeting. So subscribe to the channel if you guys want to stay up to date with all of this information, and as always, like the video because it is Saturday. Like the video. Thank you guys for tuning in. Get your free stocks links down below in the description as well. Thank you guys for watching, and I will see you in the next one.